Imagine waking up one morning to find that a quarter of your investment portfolio has vanished overnight. Sounds like a nightmare, doesn't it? Well, for many investors, this isn't just a bad dream, it's a very real possibility as we approach the coming week, the pinnacle of the earnings season. Now you might be thinking, Felix, aren't you being a bit dramatic? Well, hear me out. The 8 corporate giants we're about to discuss aren't just any companies. They are the pillars holding up entire sectors, in fact, the entire market. And when these titans sneeze, the whole market catches a cold, worse than COVID. It's not a cold, somebody screams. All right, enjoy the vaccinations. Did you know that these 8 companies alone make up 25% of the S&P 500? That's right. So a quarter of the basically entire market rests on just these 8 companies. But my intention here isn't to panic you. My intention is actually the very opposite. I want to prepare you. I want to teach you the method to the madness and teach you everything that my golden retriever Winston has sniffed out. He's got a very good researcher, knows that one. So we're going to dissect the upcoming earnings reports of these market movers. We look at what to expect, what could surprise us, and most importantly, how you can position yourself to potentially profit regardless of the outcome. We'll explore Amazon's e-commerce empire and AWS dominance, Apple's latest product lineup, Microsoft's AI push, Google's advertising powerhouse, Meta's metaverse bet. Is that a real thing? Probably not, right? We're going to probably look more at advertising there too. And then Uber's recovery as well as Tesla. You know, how does it feed into Uber? Visa's swipe volumes. I've just done my fair share of that. And then, of course, the fatties, Eli Lilly's groundbreaking slimming drugs that will make us all happier and healthier and make some nice pharma billionaires. Yay, cheers. But knowing what to expect is actually only half the battle. The real question is, how do you turn that knowledge into action? And if you want to learn how to spot stock breakouts before they happen, because the big ones are always predictable, then I've got something very exciting for you. I've spent weeks, months actually, trawling through everything that I know, everything that I've learned as a former banker and trader for the last 10 years and I put that together in a 35-minute masterclass, which you can watch for free. And it'll teach you what? It'll teach you the rules to spot those breakouts before they happen. What you need is 30 minutes. You need a desire to learn and get better and get smarter and belief that you can beat the market. And most people think that they won't, and therefore they'll never learn, and they never do. But plenty of people do. If you look at the, if you doubt it, seriously, read the earnings reports that are just out of Morgan Stanley, Goldman Sachs, JP Morgan. Where do they make all the money? The trading division. Yeah, trading. Trading can make a lot of money. But even if you're just an investor, you rather buy the stuff at the top of the market, or would you rather buy it as it's about to rally up? Well, if the latter is the case, then go to felixprehn.org/get free and watch the masterclass. There we have it. Now, let's kick things off with Amazon. If you thought Amazon was just about, 2-day shipping and Alexa telling you bad jokes, that kind of thing, well, it's a little bit more than that. Let's look at the numbers first, and we do that for each one of these stocks. Wall Street's crystal ball is predicting earnings per share, so profits per share, of $1.14 and revenue of $157 billion for the quarter. What happens? You beat those numbers, moon, you miss those numbers, floor opens up. What if you hit those numbers? Floor still opens up because the market needs you to beat expectations. But the growth is something. 25% growth in earnings per share. A 10% bump in revenue is expected. So pretty high bars for Amazon, a stock that's gone absolutely nowhere. Because the stock took an 8% nosedive or so after the last earnings. It then bounced back to 190. It actually bounced back to 200, which is when Bezos, the almighty, started selling, and the stock kind of decided, well, if the almighty is selling, then maybe we should just wait and we won't exceed 200 for a while. So what to watch out for on those earnings? Amazon Web Services, AWS. The cloud computing thing grew at like 19% year over year. It beat estimates. It accounts for about 2/3 of Amazon's profits. I know, insane. And the other third is basically advertising. The whole retail thing is a folly. Well, it's a data collection folly that's going to make them a lot of money. But yeah, it doesn't make very much money. But watch out for AWS margins. They've been softening. And we want to watch out for, can they grow with good margins, or is Microsoft and Google and everybody else in the cloud world nipping at the margin heels there? So what could get the market really excited about and really fire up the Amazon stock? Strong growth in AWS sales and showing they can tighten their belts. So Amazon typically spends a lot of money for most quarters of the year, and the market hates it. A bit it actually generates the future growth, but that might come in 3 years or 5 years or something like that. And then they tend to give us a quarter where they tighten their belts a little bit, and that's sort of what keeps the market sweet. And back to Amazon, yeah. So watch out for those numbers. Let's have a look at the stock chart as well, and I've got that on the screen here for you in Trade Vision. There is a week's free trial to Trade Vision, by the way, and I'll show you why that might be something that is actually very, very useful. So since the beginning of 2022 here, Amazon stock's only up 5%. Buy and hold 5%. Trading it 37%. All right. Of course, past performance, not future and that kind of thing. I gotta say that. Now we called it a buy here at 178. We're trading at 190 right now, so it's a pretty good call. And what do I see when I look at that? Well, that high here is a little lower than that high there, and that makes me a little bit, tiny bit. So let's look on a more advanced chart. You can click on the top right here, and it'll pull up for you a more advanced chart. And one very, very cool thing we've just added for only the biggest stocks, because that's sort of where it makes the most sense, is support and resistance lines. You see that resistance up here at 200? That's not because it knows that Bezos sold at 200. That is the actual market positions of all the market makers out there, all the actual positions for all the future, and therefore tells you from the options market, which is 95% of institutional dark pool trades, and therefore it tells you it's very hard to break through 200. So it's very, very useful. It also tells you there's support here at 160. And what I would also watch out for, maybe make a note of that number every Monday or something, and then see how it changes. Because say after earnings, we go up a little bit, say, right? And then the resistance moves up to 210 or 220. What do you now know? You know that the market is actually shifting their trades up. It's believing that this rally is going to last. So it's a very, very useful thing to look at, and very, very useful, especially if you're trading, but also if you're an investor. So you can get that. You just click on the little support thing down here, and then there you have it. So that was the high, the $200 high, the Bezos high. Then here we were at 995.5. So really the key is, do we break out above that previous high now, or do we go lower? If we go lower, we're probably going to go back down to 170 or even to 160 where the support sits. But if we go higher, 200 is the gear to get on. And really the deal breaker could be that Bezos has hit the sell button again, because, the man needs another yacht, doesn't he? How big's his current yacht? It's only 150 meters or something. There's probably somebody who's got a bigger one, and it's very embarrassing for him. You got to have some sympathy for these billionaires. It's a tough life, right? You rock up with your 150 meter long yacht, and then Zuck's there, and his is 180 meters, and now you look like a poor bastard, right? So you got to have some sympathy for these guys. It makes a lot of sense to sell. So there we are. That's Amazon for you. Now moving swiftly along, then we've got Apple. The market goes where Apple goes was the maxim for the last 10 years or so. Maybe Nvidia has taken that crown, but it still is insanely important. Wall Street is expecting Apple to serve up an earnings per share of $1.55. You might want to write these down if you wish. And revenue of about $94 billion for the quarter. This is pretty good. Now, why does this quarter matter so much? Well, we've got the iPhone 16 fresh out of the oven. We've got new AirPods that now have the USB-C thing, which is, I think, the European Union communists enforced that. And then we've got lots of new Apple Watches and so on. But the real question is, are people going to buy, or are people buying the new iPhone because of the whole AI malarkey, or is it a damp script? So yeah, watch for those iPhone 16 sales numbers. We've got reports that they are amazing, and we've got reports that they are disappointing, and nobody seems to really know what the answer is there. Hardware sales have been falling these last few years. So ultimately, what I actually look for now with Apple is service revenue. So that's, I think, where the real money is going to be made, because the margins are much higher. So watch out for service revenue guidance. That's really the key thing here. Now, Apple, since the beginning of 2022, is up 23%, which is nice. Have you traded our little green indicator here? Just buy when it's green, sell when it's red kind of thing. And I'm not recommending that, by the way. I'd strongly recommend you have a better risk management system in place. Otherwise, you will fall on your face, probably. But anyway, you'd be up 49% versus buy and hold. Not too shabby. When did we call it the last buy? At 229, trading at 236. So far, that's a good call. That's a 2-year high, which is looking pretty sweet. We've taken out here the July 15th high. Now, where's our resistance line on the way up? Are we going to hit our head somewhere, thanks to Monsieur le Market Maker, who will say, no step further than this. Michael Jackson's great, isn't it? 240. You see that here? Resistance at 240 very clearly. So that's only $3.40 above, which isn't brilliant. It's also at the sort of upper end of the market actually expects us to move quite a lot. And let me show you that with a blue line here. So if I take a blue line over from this blue box there, that's your expected move. We're expected to go up to about 249 or down to about 225. A pretty big bouncy move here from Apple. So a lot rests on those iPhone delivery numbers. So watch out for those. Breakthrough 240 in a meaningful way will be very, 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 very good. Did I say very often enough there? I think I probably did. Now let's talk about Bill's little company, Microsoft. And Wall Street is expecting Microsoft to bring in $3.10 profit per share, earnings per share, and about a $64 billion in revenue. Now, Microsoft needs to beat that to keep everybody as happy as Bill when he is on a beach. Is that impressive? Well, 4% growth, earnings per share, 40% bump in revenue is what's expected. Pretty good considering how long they've been around for. Now, they smashed the last set of earnings really, really tremendously. 13% earnings per share beat and about $2 billion in extra revenue. So I think the real expectations will be higher than the current expectations. Does that make any sense? It doesn't, does it? But that's the way the market is. The market sets expectations, but if the company has a really good story, like Microsoft does at the moment with the AI co-pilots, we think they will do better, so they kind of need to beat more than some others. So watch out for AI, watch out for cloud computing growth, especially for margins if they break them down for that. And by AI, I mean co-pilot adoption. How many people are using it? How many companies are using it? Are they going to give us some guidance on what they expect percentage-wise? How many people are going to use it? That kind of thing. That is really where the extra money comes in for Microsoft. And it'll also tell the entire market, especially the whole software market, is it possible to make good money from these AI things? And that will therefore affect your CRM and your every other enterprise company out there. We look at the stock chart, MSFT. Again, I'm typing that into Trends AI, TradeVision.io here. And we've beaten buy and hold ever so slightly by about 6% here with our little indicator. We haven't had we said get the heck out up here, July 17th at 443. That was a good call so far. So we've kind of gone sideways. If I was to draw some lines, I would connect. Got to zoom out? It did, didn't it? Bloody thing. I would connect here the last three lows. You can see there is a bit of an uptrend, which is positive, and then you could also connect that, and you sort of get into this, pattern. and well expressed on my part. And what happens? Well, either you break out of it or you break down, and the market looks at that as if it breaks down, it's like, no! And if you break out, well, then you have to take out the sort of 440 here. Let me see if we have support and resistance lines for Microsoft. Yes, we do. Brilliant. And right now that sits at 450, up here, 450. So that's, if we get a big, beautiful rally going into next week, then 450 is probably where you're going to bump your head. 400 will be your support. So now you know that, brilliant. Head over to Trade Vision, get yourself a trial account for a week and play with it and see how useful it is for you. I think it's insanely useful. So there you have Bill's little plaything. I can't help myself, I know. All right, Google, or Alphabet as we should call it, do no evil, the search people basically. And Wall Street's crystal ball is showing some pretty impressive numbers for them. We're looking at $1.84 earnings per share. We're looking at 86 billion in revenue just for the quarter. Why do I say impressive? That's a 20% growth in profit per share and a 12% jump in revenue. So Alphabet is doing everything right. Now, if you look at the last earnings, also very impressive. What were the showstoppers there? It was search and it was cloud revenue, with both smashed through the $10 billion ceiling, and everyone's doing the happy dance. So last earnings, stock jumped at 20%, 20.8% to be precise, which is pretty impressive. And what do we expect this time around? Well, we can look that up actually. The market does give us that information. But first of all, what are we seeing? Well, we had this downtrend here from July to September. We seem to be recovering. This is sort of a recovery thing, right? Now, recovery thingies can either, the fact that it refreshes is a little irritating, isn't it? Recovery thingies have two things that happen. Either, like here, you go down and you start crying, or you go up, right? Clever insight, isn't it? and you don't know why you're in it, basically. Now, we did call it a buy here at 163. That's still a decent call. Let me have a look on a more advanced chart. I think you can handle it. And what do I see here? Well, I still see that buy signal here. And by the way, these sort of sideways moves are quite good. They shake out the bag holders. People who want to sell kind of give up, and then it makes it easier to rally up. The support is down here at 150, recent low as well. And then the resistance sits up here at 160. So what's the stock going to do? Well, the Wall Street expects it to go up to, so 180 is the resistance, apologies. Wall Street expects it to go up to just under the resistance, 177, or down to 153, just above the support. The blue box here is support and is expected range of movement, and we will make that a bit easier to read in the coming weeks for you, don't worry. So I like the sideways move. It makes me feel a little bit more optimistic, to be honest with you. Earnings where we have a massive rally make me feel a little queasy inside. This was the good set of earnings. So that one was the blowout one, and then the last one was kind of disappointing. Right? We missed by 0.5% in the stock, and the stock drops from 180 down to 150. That's how fickle the market is right now on the whole data center AI world. Next up, we have a company that's kind of close to Google, and you wouldn't think it because they don't do any search, but it's basically advertising, and it is of course Zuck's Meta, and we're expecting $5.29 profit per share, 40 billion revenue, that's a 22% improvement in profits and an 18% jump in revenue. So Meta is back. I remember everyone going, oh, Meta is a loser stock. Why are you talking about it? It's crap. No one uses Facebook anymore. Yeah, okay. Stocks up 49% since the beginning of 2022. If you traded our little green buy signals, you'd be up 175%. So maybe check out Trade Vision. It might just be something worth using. So we called here the last buy at 525 and said exit at 576. That's a very nice, very clean 10% gain there. And so right now we're basically saying we have no opinion. We have no opinion on the matter, which is what Bill Gates says, isn't it? When, never mind. I'll stop digging myself a hole here. Let's have a look at the resistance. And the resistance for Google, let me just delete my lines here. So for Meta, rather, sits at 600. So $25 up. Support's much, much lower at 520. And we're expecting the stock to move as high as 630 on earnings or as low as 516 on earnings. So massive, massive movement incoming here for Meta. So what should you watch out for? Advertising. They outdid Google's advertising growth revenue in the last quarter. Also watch for llamas, those creatures. Llama 4 is coming up, and they are spending $37 to $40 billion on llamas in 2024. Zuckerberg's always had a kind heart for furry creatures. So that's an LLM, by the way, if you didn't realize. It's sort of a ChatGPT competitor type thing. The metaverse thing is still a real thing, the reality labs thing. And we're kind of thinking, what are you going to do with that? Are you going to make some money out of it? That's definitely a thing. And also, US elections make Meta lots of money. Political ad spending could give Meta's revenue a big, beautiful, bouncy, huge boost. So I'm expecting a very good quarter. But really, you want them to grow faster than Google in terms of ad revenue growth. That's kind of the key thing. So watch out for that. And then they're going to say, we're going to spend a lot of money in 2025. And if it's a lot of money, as in more money than the market expects, then it's not going to love that. So watch a little bit out on that. Now, moving on to Uber. Uber is self-driving itself to about 62 cents of earnings per share and a revenue of just under 11 billion for the quarter. That's what we're expecting. And that earnings per share growth, by the way, is 474% year over year. 474%. So they're really making money. They're not just generating cash, they're really making money. And revenue also growing 18%. Some very interesting interviews with Uber's CEO about how he'd love to have Elon's cybercab in the fleet and that kind of thing. The man looks genuinely terrified. Genuinely terrified, which should make for some great negotiations for Tesla to roll out their fleet in Uber's app, which makes a lot of sense because you just want to grab market share. You don't want to build the whole thing yourself. Now, somehow though, and this is where the market's sort of weird, the fact that the cybercab is maybe coming a little later, maybe 2027 than people were hoping for, is given Uber a bump. When in reality, if Uber does get its paws on those cybercabs, it'll be a lot more profitable. So it's kind of weird, but until Elon says, well, he did actually say it, didn't he? He said in the presentation, Uber drivers will be able to manage a fleet of cybercabs. And therefore, it's amazing for Uber. It's just like they finally won't need to pay drivers anymore, which is obviously, one of the biggest pain points for them has been drivers and unionization, and are they employees, are they not, do they need to insure them, all that kind of stuff. So I think Uber has got a very bright future, and I think Elon's gonna let them have some cybercabs. So what should we be watching out for? Well, hopefully we're gonna get a revenue surprise, more partnerships, and just probably international expansion is kind of where I see some of their real money coming in. So if I look at the stock chart of Uber, and I'll be very honest, I didn't really get Uber for years because I was like, these guys are just burning money, I don't really get it. And then when I started generating free cash flow, it's like, okay, I think I missed something here. And I definitely did. Now, buy and hold since the beginning of 2022 would have you 57% up. If you traded our little green buy and sell signals here, you'd be up 90%. And again, never a promise of future returns. But we called it a buy here on the 6th of August at $64, which has been a pretty good one, despite that sort of rally and dip and madness here. So overall, what are we looking at? I think we're looking pretty strong here. We're just the $80 sort of dollars zone seems to be a bit of resistance up here from the highs in the beginning of the year. So a strong quarter would finally get him out of that 80 zone, and I think would have us heading towards 90 and 100. Now, the next company, maybe not quite as sexy, but very, very important. It is the plastic itself. It is, of course, Visa. And the market is expecting Visa to generate $2.58 in profits per share, about 10 billion or 9.5 billion in revenue, which is 22% growth in profits, 10% jump in revenue. So for all the people out there who are saying, oh, Visa will be irrelevant because of I don't know what, crypto or something nonsense. They're just going to be more profitable. So Visa is just an amazing business, an absolutely amazing business. So what should we watch out for on Visa? Transaction volumes. We want transaction volumes to be higher. Any good news on the sort of legal front, various government challenges, and obviously improved guidance. So if they're going to give us slightly better guidance for next quarter, that'd be good. But that Department of Justice lawsuit could be a bit of a party pooper, so I'd watch out for that one. And also if they come in more cautious on the economy, then that would also be a little bit of a party pooper thing, although that could be sort of sandbagging, lowering expectations. Stock is looking, basically gets tapped out every time we hit the same resistance level here. Let me draw a little line for you. Okay, there we go. So I'm just connecting the highs here. Can you see that? That sits at about just under 300, 290 something. What was that? It was basically 290. Yeah, 290. So you kind of need to break through that sort of meaningfully. Third attempt, lucky hopefully. The more often you hit that, the more of a resistance point it becomes. So at the moment, 290 is definitely the barrier. And then last but not least, in its full glorious size, we have LLY, Eli Lilly and Co., the pharmaceutical giant that is intending to make the whole world healthier. And they just want to make a lot of money. Let's be honest here. They are expected to bring in $1.45 earnings per share and revenue of just over 12 billion. And that's pretty good. That's 15% more revenue than this time last quarter. So the fountain of youth or thinness is pretty extraordinary. It's outperformed the S&P massively this year, up 58% or something like that this year. And why? Well, they've got Mounjaro and Zepbound, which are the same drug for diabetes and obesity. And why does it work for diabetes and obesity? Well, if you get people slimmer, their diabetes goes away, basically. And yeah, there are going to be people kicking off in the chat, at least me saying that. But it basically mimics healthy eating. Well, not healthy eating, but at least calorie-reduced eating, which is definitely a benefit for the body, although healthy eating would be better. So they also have Ebglyss, which is their eczema treatment that got the green light, and the whole thing is of course related. Food is the one thing that makes you healthy or unhealthy. So if you are heavily overweight, yes, your organs are all going to suffer and you're going to get diabetes and your skin is going to be rubbed. They're all symptoms telling you stop eating the pie. We've just lost all of our audience who's a little bit on the rotund side there. So it's a brilliant business. They're also launching an Alzheimer's drug, which is apparently called something like that. I know, well pronounced, which could be, I have no idea how you pronounce that, but that could be something. So the global eczema thing is a big thing, which again is all freaking food and lifestyle driven. But people are not going to fix that. They're just going to pop a pill. Now, what's the problem with it? PE ratios are 113, which is higher than a kid on a sugar rush. Enjoy your sugar rushes. There won't be any more left once you've had our pills. Although they're going to sell you the sugar first, I imagine, so that you become a patient. So the stock has been kind of hovering sideways here, just below the 950 level. We caught the last major rally here at 800, all the way up to 900 and a bit, which was a nice rally. Right now, we're kind of being a little cautious. This is what I call it an exhausted pattern looks like. Imagine Winston climbing a mountain. He sits at the top and he's enjoying himself, but he wants to have a bit of a nap. That's kind of where it's sitting. So we have to get some real catalyst coming out there. What could they be? Well, blockbuster sales. Maybe they got some more tricks up their lab coat sleeves. Maybe they're going to cure something else that is blatantly, obviously caused by obesity. And they'll package it as another drug and they'll make an extra, 100 billion or something. So yeah, I think these guys are doing a tremendous job if you like that sort of thing. And your morals are loose. So there we have it. Lots of insight, hopefully lots of stuff we've gone through here. I hope it was useful. If you found some use in it, share it with a friend and learn how to spot those breakouts, because I think that's really what's going to make people a lot of money in the coming years. I think it's going to get a bit more challenging. So we've had these beautiful run-ups. So head over to felixprehn.com/get-free, watch my masterclass, and I wish you a beautiful, wonderful day ahead. Imagine waking up tomorrow to find Tesla's stock price has skyrocketed 20% overnight. Or worse, plummeted by the same amount. Well, buckle up, because that scenario isn't just possible, it's extremely likely. Tesla's earnings report is just around the corner, and it's not just another